Well, welcome back. Good to be here again. Nadine from AusBiz still. The next company that we'll be hearing from is Delorean Corporation. Now, it is a Perth-based company that is a waste-to-energy company planning to list on the ASX next month. They've already raised $14 million in an IPO. So Delorean specializes in the design, build, ownership, and management of bioenergy infrastructure and associated power generation and retail, and comprises of a group of 4 vertically integrated companies that work together really at each stage of the bioenergy generation process to help deliver that to clients. Now, Delorean has in-house capability to deliver bioenergy projects across the full life cycle, from project conception right through to completion, processing organic waste, generating renewable energy, and monetization of electricity, heat, and gas. Now, to get all the details on their future plans, where to from here, we're being joined by Hamish Jolly, Chairman, and Joseph Oliver, Managing Director of Delorean. Guys, good afternoon to you. Over to you.
Thank you. Okay, well, thanks very much for that. I understand we're quite constrained for time, and we've got an investor deck here, which we ordinarily would run through over about 40 minutes, but we'll keep it very, very high level for you. And essentially touched on the key points. That was a pretty good synopsis leading in. Fundamentally, we're building a business and build a business that's become as a gentailer, a national gentailer, generating energy and retailing energy. So our journey began, Joe and I, as co-founders of this company, Delorean Corporation, about 8 years ago, in a collaboration in the build of that anaerobic digestion plant, that bioenergy plant that you can see in the picture on that screen. Now, the original plan for us was to be an EPC builder of these plants. And in fact, that has actually unfolded. We're in construction for 2 other plants since the construction of this one. But on that journey, opportunities have unfolded for us to essentially build a vertically integrated energy generator and retailer. So we've now got a Delorean Corporation heading up a group of 4 subsidiaries, together profitable for the last 5 years. It includes a development company taking projects from a glint in the eye through to development approval and FID, a construction company building the plants, and an electricity retailer which began its journey in Western Australia but now has its licenses in the national energy market to progress our retail story into the eastern states. And the pathway for the electricity retailer is to use the generation assets that we build in the eastern states as a beachhead to build out our own customer base. We're experiencing at present tailwinds across the 2 sectors that we're moving into, being the waste sector and the electricity and gas sector. But we'll keep ticking over. When we talk about the sort of tailwind context, as a bioenergy development company and construction company and retailer, we're basically participating in 2 marketplaces. The first is the market for organic waste, which would ordinarily go to landfill. There's a national move to basically halve the amount of organics go to landfill by 2030. All of this will be promulgated through states and councils. And locally, you'll see that your local council will move to a 3rd bin, which is processing organics. Our role in this is to take those organics, we get paid for it, and provides a revenue stream to support what we're doing in our projects. Similarly, on the energy side, we're all aware of the transition from fossil fuels to renewable energy. Almost in spite of government policy, notwithstanding ARENA and CFC and others are getting around this, and we're riding the top of that wave as a bioenergy gentailer, delivering baseload power into the grid and biomethane to the gas mains, which is what's in demand on both the gas and the electricity networks. So when we talk about the integrated nature of the business, Delorean Corporation is the holding company, the listed entity. Its code will be DEL. We're programmed for, scheduled for listing at this stage on the 8th of April. And as was mentioned before, we've been through we'll be closing the book tomorrow, and it looks like at this stage, we're in the order of magnitude 3 to 4 times oversubscribed at this point. The subsidiary is predominantly Biogas on the left-hand side, which is responsible for building the plant. So that's our engineering company. So it's in build for 2 plants already and has O&M contracts on those plants as well. So it's got margins from construction contracts as well as annuity-based revenues on O&M. Delorean Energy is the development company. It conceives projects and takes them through to FID, as I mentioned. We've currently got 4 projects in the pipeline, 2 which are shovel ready and 1 which will be invested by the IPO funds. So the IPO funds will go directly into asset. There's nothing coming off the table from that perspective. Cleantech Energy is the electricity retail company that I've mentioned. It's established in Western Australia now as the 4th biggest independent retailer, and I explained that we've got our licenses to move east, so its strategy will be to use the beachhead of assets to grow its customer base in the eastern states. In the context of this slide, probably key points are we have been in the predominantly revenues have been coming from the retail business and the EPC contracting business. As we move into asset ownership and infrastructure ownership, we're moving more to annuity-based income streams from infrastructure ownership. That means we'll be in the waste and renewable sector, as I mentioned, and we'll be a generator and a retailer. So if we unpack this, essentially we're taking domestic and commercial industrial organic waste from marketplaces and getting paid for it, paid for our fuel, running it through a mature technology bioenergy plant. So we're not a tech play. We're migrating technologies that are proven internationally and deployed in Australia. We have a biofertilizer product which has emerging economic value, but we can derive a revenue stream. And then we're producing essentially electricity and heat, electricity for the electricity grid and behind the meter. And we have a project, we're producing biogas, so we ultimately can upgrade to biomethane, which is renewable natural gas. And one of the projects that Joel will talk about confirms that we've got Australia's first project delivering green gas into the gas grid under a contract to Origin Energy, passed through to AGIG for unaccounted for gas in the grid. We'll talk about that later. I won't dwell on the history. Those that are interested in the investor deck, it's available on the prospectus. On the website. But we've consistently reached critical milestones in the 8-year journey to get us where we are today. I'll pass it across to Joe.
Thanks. Thanks, Hamish. Yeah, so I guess looking at the Australian landscape in comparison to the UK, Europe, and the rest of the world, I think what we can see is from a bioenergy perspective, Australia is quite far behind. We've got a few industrial and commercial industrial facilities in Australia, but nowhere near the capacity and capability of what we've seen in the UK and Europe. So there's been numerous reports being completed around the bioenergy sector, and a few points really highlight that if we was to look at 2017, 0.5% of the national electricity was driven from bioenergy, which means that if we look at the total of 9% that could be achieved, that's a $3.5 to $5 billion investment to get that 9%. As we step through, we look at what's in-house, what we're working on. What we can see is the projects that we've completed, we're in construction with, we're in projects that are shovel ready under Delorean, and projects that we've got in development. And we've worked in every state and with the development shires through to councils and the local EPAs to get these facilities approved and ready for build. I'll step through the project. So the Australian success story is seen as the Jandakot facility, which was one of the first, is the second facility built here in Western Australia, processing commercial and industrial food waste, organic waste from food manufacturers, food scrapings, off the supermarket shelf waste, and generating energy. And that was a circa $10 million investment by Rich Grow Garden Products. The facility was completed back in 2015 and has really been an Australian success story. The other facilities that we've got in construction, commissioning is the Blue Lake Milling facility for CBH Group. That's across in South Australia. That's nearing the end of construction, and we're in commissioning with that facility. and we look to close that out before the end of the year. The facility, that's taking ag waste, so ag residue, oat husk and dust that's being processed for energy consumption on site in the form of heat and power. The facility across in New Zealand that we're building for eco-gas falls under the Auckland Council municipal food waste that's been collected, up to about 70,000 tonnes over the next 25 years. And that facility is in construction, is in completion of the civils, ready for the anaerobic digestion part to come on stream shortly. So from a company perspective, Biogas Renewables is pioneering and the lead company here in Australia, and its view is around the commercial element to bring that competitive advantage to the organisation. What we're able to do is have a quick project delivery, 12 months build, 3 months commissioning to get that facility up to 100%. We've got cost advantages having that in-house experience, that know-how of how to deliver these facilities in the Australian context, and our approved suppliers that work across the range of equipment that we're installing, from generation, depacking, and processing equipment that's all on site. As we transition into the build, own, operate, I think what we're looking at is how do bioenergy assets make money, basically. And predominantly, there's two elements to it, which is energy and diversion of waste from landfill to generate gate fees. So we've got the process in the middle. We're taking a wide variety of organic waste streams, from ag residues to commercial industrial waste streams, through to food and garden organic waste from municipals. Then we're putting into a process which is a biological breakdown called anaerobic digestion, which generates as a byproduct biogas, which we can upgrade for biomethane. We can put into a CHP and generate revenue, equally a boiler. We can also go that next step and create green hydrogen from the biomethane that's being produced, in addition to capturing and reusing the digestate that's a liquid nutrient fertilizer effectively. So we're diverting organics from landfill, capturing the fertilizer, the nutrients, and then the energy that comes off as a byproduct. We're able to use that in a form for a revenue stream, as well as LGCs, large-scale generation certificates, carbon credits around diversion from landfill, and other subsidies that tie into carbon offset effectively as we move through that ESG element. From the project perspective, we've got two that are near shovel ready. The first facility is Delorean Energy SA1, and we developed that project and sold down 70%, retained a 30% free carry in that project for 100% investment through the current investment partner, which is Cleantech Energy. We're working to FID, and we're pushing to close that within this financial year. And we're seeing unlevered IRRs of that 10 to 13% for that facility, $25.5 million build. With the Delorean Energy Victoria 1, it's a project in Victoria, in quite an agricultural precinct, but we're able to capture food organics from the local area, in addition to ag residues. We have that project shovel ready, working through the final grid connection, and again, an unlevered project IRR of between 12 and 16%, where we're looking to deploy the IPO funds of the 13.5 million into that project. The projects that we've got in development that we're working through to get shovel ready by October, November, September time is one project in Queensland and another project in Victoria as well. These projects obviously ranging from 15 to 25 million, and again giving project infrastructure returns at that 12 to 17%. So really high yielding for this type of infrastructure based on gate fee and energy offtake, with additional benefits that would come from the fertilizer and others. In terms of the rollout plan from the IPO, the capital is being deployed into DEVO, which is the Delorean Energy Victoria 1 project, where we will transition the business into that build, own, operate, maintain, manage course, looking to leverage the project as we move through construction, commissioning and operation to redeploy those funds back into the project pipeline that we've got in addition. The DeSalle project is a standalone project that we have a 30% ownership of and doesn't require any further investment today. The portfolio of projects that we're currently working on outside of the additional projects that we've got is 4 assets at a value of $75.5 million. So we're looking to build a portfolio and really highlight that there's a future managed fund around building these infrastructure projects. As we've seen in the UK and Europe, there's thousands of these facilities that are diverting waste from landfill, taking gate fees for the input material and building out that pipeline of projects as Delorean Corporation uses its vertical integration of the companies on the left side, deploying the capital through Delorean Corporation into infrastructure that will then generate further revenues with support from our current banker, the CBA, for a rollout of leveraged finance across the portfolio range. So that's our current driving where we're heading to. And I guess to touch on the energy retail side of the business, Hamish has already alluded to Cleantech Energy, one of the 5th largest Western Australian independent energy retailers that's got its licenses across in the NEM and also in Victoria, and is working on the back of the facilities, the generation that we will put in and facilities that we'll build on the East Coast and nationwide, and effectively building its book from a retail perspective. So has the in-house IP, managing over 300 customers to date, with expansion across into the national energy market and underpinning the retail side of the business to get a higher rate of return from the energy that's generated. Equally, it's looking to deploy and also explore further opportunities in wind, solar, and other renewable energy sources for energy production that can offset its current retail profile. Touching on the financials.
Yes, so just a snapshot of the financials, historical, and a look forward to FY21. We've been through the audit process, obviously, for IPO. We've got a 5-year track record of profitability with fast growth. All of this has been achieved essentially from retained earnings and cash flows, with a little bit of support from our bank, Commonwealth Bank of Australia, mostly around prudential securities and performance bonds, rather than sort of debt per se, a little bit of asset finance. FY20 was 3.6, and the multiple for the valuation going into about 5 times for the IPO pricing at 20 cents. FY21 forecast is underlying EBITDA is ahead of FY21, just pegged back a little bit by one-off items associated with the IPO that we couldn't capitalise, and some impacts on things like performance shares and options, etc., which sheet back to the balance sheet this year while we get that structured. But the curve looking forward is also looking strong and on a similar trajectory to what you see there. Won't necessarily break down this slide, it's a bit complex, but if we just ask Joe to go to the next slide, I guess the key message is that we, in the pre-IPO history of those last 5 years, we're predominantly generating income from third-party services, EPC contracts and energy retailing. we've built our own pipeline of projects to own and established 2 shovel-ready, 2 coming behind. We move into asset ownership through the IPO. And what we expect to see then is a transition, growth in the overall revenue, but a transition in terms of weighting to annuity-based income streams from free cash flows from the infrastructure assets that we're putting in place and taking those forward. So our aspiration is to be in time and not too far away, once they start to yield, price earnings oriented, high growth price earnings oriented infrastructure business, potentially defined under a future managed fund or infrastructure fund.
We've got a couple of questions, so we'll keep it high level. I know that we've got 5 minutes left. In terms of the board, we've structured the board, myself and Hamish, both experienced in this sector. My background is in the bioenergy space in the UK and Europe, and heading across here with 15 years experience in bioenergy. Hamish?
Yeah, business law accounting. Arthur Anderson, as it then was, trained chartered accountant, predominantly professional services, a stint as the Director of Strategy and Ventures, doing mergers and acquisitions and group strategy at Bank West, and a sabbatical at one point as the CEO of Greening Australia, environmental not-for-profit. It's worth mentioning Steve Goslow, who joined the board a few weeks ago, pre-IPO. Steve's credentials are as the Managing Director of Tox Free for 16 years, where Tox Free was a listed entity trading at a few cents and sold out to Cleanaway at $3.40, $3.50 on an $850 million valuation. So he's got a really strong track record. Steve, I think, had been courted by a number of different organisations to join, and he's elected to come with us, which is a great endorsement, and he'll be a massive asset for us in the growth of this business. David MacArthur is in the COSEC role, has got experience in ASX, management of ASX small caps and supporting ASX small caps.
And then general managers in each part of the organisation that specialise in that area of focus. We'll head on to this slide. But I know we've got 4 questions, so if it's happy for us to read them out. Based on electricity to residential customers, SMEs, C&I customers, or single customer offtake arrangements. So currently in Western Australia, in the WEM, we're only selling to customers larger than 50 megawatt hours per annum, which is C&I larger customers effectively. As we move across east, then we'll be looking at that retail book, as we start to understand the residential customers in more detail. Another question as well, how does bioenergy compare on cost versus solar, diesel or gas on upfront capital cost per megawatt on an ongoing cost to the customer? So again, great question. The complexity here is that we're actually getting paid for our fuel. So we're processing and diverting organic waste that would go into landfill. So we're able to generate baseload power 24/7, and we're being paid to process that material. Therefore, the byproduct that comes off of that is gas. So we are seeing higher yields than what we would see from a solar, diesel, or gas. Plus the green element that's there around capturing that methane, that biogas for energy production, and really driving a green energy solution. So our yields that we're seeing, range from 10 to 20% IRRs, which I'd say is higher than a solar, wind, and other assets in addition.
Yeah, and just maybe to articulate that a bit, this question is driving it. What is the levelized cost of energy, I think, compared to, say, solar or diesel or gas? And I think the answer is it's difficult to say. You could argue that it's almost zero, because we're already covering the cost of the asset in the gate fees associated, the revenues associated with the gate fees and organic recovery. So let's say, for example, a $10 million plant. Let's take the Jandakot Bioenergy plant, $10 million CapEx, delivering 2.4 megawatts of energy. that arguably would be a relatively high, but the internal rate of return on that project is significant, and in the range that we've seen in the context of the projects we've already shown, and so the levelized cost of the actual power is quite low. The FY21 revenue forecast, Laura, I think we've answered that. Little bit of a softening on the retail side in the West Australian market, but predominantly associated with IPO costs and one-offs that we can't capitalise in relation to the listing.
I guess on the project side, some slight delays around COVID with regards to a New Zealand project that we've got in contract as well. So that was meant to fall earlier in the year. How long are the offtake agreements you're signing with customers for each of the projects? Are these take-or-pay contracts? So in a lot of cases around the energy side, we've got 5-year offtake. On the electricity side, we've got our own internal energy offtaker, and we're using that offtake for retail contracts that range between 1, 2, and 3 years effectively. And we're rolling that as we understand the market and as we're driving that market forward. On the waste side, we're getting contract for waste, but it's a merchant market. The waste market changes seasonally, and we look at the volume that's in the area, and we get contracts from EOIs all the way through to full contracts, and we've got a minimum requirement on the projects to meet FID. So that's answered the questions that have come in. We're happy to answer any more, but I appreciate that we're right on track. So we'll hand back across.
Yeah, thanks, guys. Great presentation. Thanks for answering those questions. Hamish Jolly and Joseph Oliver, Managing Director of Delorean. So one to watch. And yeah, we'll be back with more in just a few minutes. Thanks, guys.
Thanks for your time.
Thank you.